Hello, everyone, and today on Business Spotlight, I'm joined by Ian McKinnon, who's Managing Director of Financial Clarity Scotland Limited. Hi, Ian. Thanks for coming to join us today.
Hi, good morning, everyone. Thanks for having me. Thank you.
So, Ian, I guess what I'm keen to unpack is a little bit how you've got to where you've gotten to. What's your journey of your career to this point?
So, my career in financial services spans almost 20 years now. I initially was drawn to financial services through a close friend of mine. Him and I set up a business back in the mid-2000s, and very shortly thereafter, we decided that we would go our separate ways, but remain very close friends up to today. And 17 years ago now, Financial Clarity was set up, and it's been an interesting journey. We've operated off the kitchen table. We've operated in shared office accommodation, and now we obviously have our own accommodation in the city centre of Glasgow.
Okay, so you've been in it a while and doing it a while. Where did the interest in financial services come from?
I think I saw a lifestyle that my friend had, where I know now that it's probably I had the wrong or a skewed vision on it, shall we say. But he seemed to be an individual who, while I worked, he played golf, and while the sun was shining, he was out enjoying it, and that attracted me.
Yeah, and has that been the reality?
I guess we're all different as human beings, and his approach to life, I'm not going to say it's right or wrong, but my approach is I'm up early, I work long days, and financial services has been challenged over the last number of years at different points, and I'm happy and proud to say that we've fought our way through it. So
yeah.
So we've worked hard. I've never been a golfer. And I've never seemed to have that relaxed approach to things.
Yeah, it's just your way. So for those of us out there who aren't quite clear on what financial services might mean, in layman's terms, how do you help people?
So I guess many years ago, we had to make a decision as to where our core services would lie. And we, on purpose, don't do anything around about the pensions and investment marketplace. We look after people's big assets, which is their property. So we assist people in buying property. We assist them in acquiring investment property. We do a lot of retirement work. I have a license to give retirement lending advice to people up to age 90, believe it or not. And alongside that, we do some estate planning work. I am a qualified Scottish will writer and estate planner, and we look after families in terms of their personal insurance requirements, everything from life and critical illness cover, and through to making sure families have cash flow through income protection. Okay,
so quite a broad range of things. So can I just ask a couple of questions about the retirement lending? What does that actually mean? What does that look like to people?
Well, the marketplace in the UK is such that more and more of the property wealth is held by people who are age 60 and above.
Yeah.
And that demographic is growing quite significantly. The stats would tell us that there's more than 18 million adults in the UK above age 65. And while we maybe have a fanciful idea that at that stage in life, the house is bought and paid for, the retirement planning's all completed, and we've got enough income to see us through to the end of our life, that's not always the case. And more people who are either in retirement or approaching retirement are now finding that they need to tap into that wealth that they hold in their property, but they don't fit criteria for mainstream mortgage lending. Now, they might want to be doing that to gift to family members. They might want to be doing that to pay off interest-only mortgages that were taken out 20 or 30 years ago.
Yeah.
Or they might well have unsecured debts in retirement that are just really causing them some financial aggravation.
Right.
So
okay.
the process of looking after these people is a bit more complex. And in the UK currently, there's probably active advisors, maybe 4,000. So it's quite a niche market.
Yeah. Yeah. Okay. And in your experience then, I guess this is kind of a broad question. It might be a bit unfair, but you'll have a few, I'm sure. How well do people plan for, their old age from a financial perspective?
I think people mean well, and I think people believe that, they're doing a lot of good things. They set out with good intention. However, I think the biggest failure is a failure to take advice and a failure to recognise certain things that are going on in the world generally. So state pension age has obviously continued to be pushed to a higher age. People are now accessing pension funds at age 55 and sometimes depleting their fund before they actually reach retirement. And of course, some people don't have any pension planning or any retirement planning to look after them financially. And when you couple that with the fact that people are living longer, then there's a real gap there. There's a real issue that needs to be addressed. So while people mean well, I think that there's a real recognition that people need to do things earlier.
And how earlier would earlier be?
Well, I think the earlier you plan, I don't think there's an answer that fits for everyone. Some people, depending on their career path, know that they're going to be very well looked after in retirement, and some people perhaps are self-employed and a bit more entrepreneurial, and they don't enjoy the benefits of perhaps working in a public sector position for many years. So I think the planning aspect of it really depends on what you want retirement to look like. But more and more, I've got to say, it's an area of the market that is continually seeing double-digit growth year on year. So clearly, people are needing to access more money in retirement.
It's interesting because I work with a number of business owners, and typically what I find is people will spend more time planning a holiday or a wedding rather than, thinking about what life might look like when, they want to retire or slow down a bit. Yeah. So what about things like wills and stuff like that? You mentioned that you're qualified in wills. Is that something most people have, or are there gaps there?
There's a section of the population who believe that making a will is in fact morbid and is almost preempting death. And unfortunately, death is the one thing that we're guaranteed in life. And I think the reality of it is that the will is essentially an important document because it's really your voice after death. And it creates an environment where your loved ones can be looked after according to your wishes. And there's not any situation where government laws of intestacy, for example, determine that we're all treated the same, because we're not the same, economically, socially, in terms of our family structures and so on and so forth. We all have heard stories of someone being disadvantaged in life. Someone who perhaps was due or expected an inheritance that bypassed them. So I think wills are important, and I think maintaining the validity of your will is also important because life changes.
Yeah, that's a good point, because a lot of people think they've done it and it's in a drawer somewhere, or they don't even know who it's lodged with anymore because it's so many years ago, or they've had kids, for example, or their situation's changed, and I guess that's when you need to update it, is it?
Yes, when there's significant changes in your life or in your wishes and preferences, that's when you should really be looking at it.
Yeah. And what about things like power of attorney? Is that something you touch on, or you advise on, or you've got people around you that help with?
Power of attorney is something that I do literally on a daily basis, because within the structure at Financial Clarity, I am the person who deals with a lot of people in later life.
Yeah.
And, you know, when people are going to arrange different styles of financing for their retirement, often lenders have an expectation that things like power of attorney are in place, which is really important because sometimes these people in retirement want to arrange some funds for the future,
Yeah.
but not necessarily draw on them immediately. So we can do, you know, some lending arrangements that would determine someone can have cash on tap or available, but held within the lender's bank account currently. And of course, if they lose capacity, someone has to be able to access those funds for them. So we have this morning, obviously, a discussion about Financial Clarity Scotland Limited, which is my regulated financial services practice.
Yep.
And we do the estate planning work through another business owned by myself called Associated Financial Planning Limited, effectively a sister company.
Yeah, yeah. Because I guess I think I'm guilty of having held the misplaced belief that power of attorney is just for old people. And, you know, one of my family members had an accident last year who was a young family member, which actually awakened me to the fact that everyone should have it. Or, you know, is that fair?
Yeah, I guess so. For me, I'm a big advocate of all adults considering power of attorney. I'm mindful that it's difficult to say to a 25 or 30-year-old first-time buyer, you know, you should really be considering granting power of attorney.
Yeah.
But things do happen. You know, there are situations where most people relate power of attorney to being something that an elderly relative would maybe require to guard against things like dementia and Alzheimer's and general loss of capacity through frailty or whatever that looks like. But of course, if a young person was injured in a road accident, for example, and survived, and that person and their spouse or partner owned property jointly, if that property had to be sold because of health considerations or anything like that, if both parties don't have capacity, the sale can't proceed. So,
at all.
Well, they would need some court intervention, and that would become a really expensive exercise.
Right.
So power of attorney for me is possibly more important than a will, because power of attorney means that while you're alive, you're going to nominate people to look after your affairs in the event of you being unable to.
Yeah.
So for me, while we're living our lives, I think that's a more important document.
It's interesting because, you know, again, just drawn on my experience, there's been 2 life events where power of attorney's been helpful. One, it was in place, and one, it wasn't in place. And I can just remember the angst and trauma that caused, because you're just second guessing all the time about what the person wanted, what their wishes were, who should do what. And as you say, family structures is best and as close as some families are when it comes to kind of bereavement or some big life event. You know, there can be differing views, can't there? Let's just say that.
Absolutely. People become emotional, and people become sometimes angry. You know, we can see all emotions when people are put under pressure, I guess, and when it relates to their family and their loved ones. So yeah, I think that's a fair assessment, Yvonne.
Yeah. And one other thing you touched on there is personal insurances. You know, what are the types of things that maybe people don't consider when it comes to personal insurances?
I think that there's a real situation where advisors themselves need to try and give advice based on real life factors. It's very, very easy to miss that adult style conversation because we're touching on darker days for clients. You know, it's great to say to a client, I've secured your mortgage offer, I've got it in my hand now, you're just about to move into your nice new home. And if I need to talk to you about some insurances, let's talk about some life cover. So that in the event that you die, your mortgage is going to be paid off. That is, of course, if you die during the mortgage term.
Yeah.
And in truth, that only really protects the lender. That makes life easy for the lender. But if we look at family finances, there's much more to consider, because even if a bereaved family had the mortgage debt discharged, they've most likely got other things like car loans, credit card balances. They've got the overall cost of living, where they've lost an income into the house. And for me, some of the biggest areas that we need to consider are what happens when we're unable to go to work. And I'm not specifically saying something here that's a critical event, like a heart attack or cancer or things like that. I'm talking about when, through illness, we're unable to work and our employer has ceased giving us sick pay cover. Because statutory sick pay in the UK, if we qualify for it, is less than £100 per week.
Really?
So while we have a cost of living that has to be met, while we have credit commitments that have to be met, and in actual fact, the irony is that life cover that someone put in place for us still has to be paid for, then I think it's more important that we look at the overall needs of a client and simplify it. They need a roof over their head, need cash flow to live. And one of the biggest things that I would suggest to people is that they consider what life looks like if that monthly entry that hits their bank account isn't there anymore. You know, if all of a sudden the income's withdrawn, what are they going to do next?
And I guess people don't maybe think about that until the event happens or something happens that kind of forces their hand. And do you find people sometimes take a more short-term view? I guess, you know, things are tight for a lot of people at the moment with the cost of living increase. Do sometimes people take a short-term view and think, oh, I'll just stop that insurance, and maybe not think about, you know, the things that could happen if they don't have that in place?
People do that. And I know that in the years gone by, that's also a difficult conversation for some advisors of lesser experience. You know, when you get the notification that your client has cancelled their insurance policy. And it's a high risk strategy for most clients, because the reality is that insurance, when we need it, it's too late to organise it. That's the situation. And the truth of it is that we need to focus mainly on the outcomes for families. And within my business and within our team of advisors, I try and put that message across quite strongly to the advisors, because unfortunately, sometimes I hear and see situations where the advisor seems to be doing something that would, you know, do them well in terms of income and so on and so forth. But we need to position why we do certain things. We've got a duty of care and a responsibility to clients who come to us and put their trust in us. And ultimately, my responsibility as the business owner is to make sure that we're always acting with the client's best outcome in mind. And I've paid a number of claims over my career, a good number of six-figure claims. And not one of these families came to me and said, do you know what, we get too much. It's come and said that, And some of them have actually come in recent times to say, I'm so glad that you dug your heels in, because without this policy and the protection that it offers me, our lives would be so much different today. You know, I can't fix people's health, but I can make sure that financially the family don't need to think about that, and they can focus on recuperation and getting back to health.
it sounds like it's well worth anyone having a conversation with you, even just to have a review of where they're at, because I guess some policies might be dated and stuff. So look, you've got a successful business, Ian. What are the biggest challenges been for you in running a business?
I've had a number of challenges. So as a fledgling business, the market crashed, and I watched people who had longer and more established businesses than mine at the time run into the hills. And at times like that, you question yourself, and you think, is there an easy option here? Do we just go quietly and fade into the background, or do we just work our way through it? And one of the things that I'm really grateful for is many of our clients today, and we do have a good-sized client bank today. Many of them have been with me since day one and stayed with us. And they've been instrumental in the growth of our business, because they've consistently, year on year, month on month, come to us with referrals to family members and work colleagues and friends and so on. And I guess the challenge for any business is understanding when to invest in certain things, when to invest in people, and as a human being, I'm risk averse. And there comes a point in time where you need to make calculated investment and calculated risk, I guess, to grow your business. But as I say, the financial services market generally, I think, has been or has faced a number of challenges over the last few years. And, we've always come through. We've had a lot of good support from other business owners that I know. And I would like to think that now I can offer some support to other people who are maybe 10 or 15 years behind me in the journey. So, I think generally it moves in cycles. And, the good times are there, but there's also times when you need to, have something put away, as they would say. In Glasgow, they would say, have something put away for the darker days.
Yeah, a wee pot under the bed, something like that.
Something like that.
I'm sure you'd be a great person to give some advice to people who are maybe 10 or 15 years behind you in the journey. What do you see changing in the industry in the next 5 years, say, and what does that mean for your business? How might you need to adapt or change?
Undoubtedly, the marketplace is very competitive, and undoubtedly technology is playing a big part. And one of the things that has been, I guess, in the financial media is the role of technology, and there's a lot of media about fintech and about robotic advice and all of these kind of things. And the truth of it is that I have either got to embrace some of that change, or I guess put the lights out and go home. And the truth is that technology will drive what we do. The housing market, for example, is even now when the market's challenged, we're still seeing growth in that market. There is obviously a lot of regulation been applied to areas of the market, such as the buy-to-let sector, where new and existing landlords have been challenged with various tax implications that they now need to face. But I guess overall, the one thing that has remained consistent all the way through is that there's an old saying in life that says safe as houses. So property is always going to be a good asset class, and the vast majority of people in this country aspire to have home ownership. So the aspiration of clients won't change. The asset class of property won't change. And I guess what we need to do is go back to what I said earlier, embrace the positives from technology and create the right outcomes for clients.
Yeah. So Ian, you've got a wealth of knowledge and it shines through, you know, in our chat today. And I really hope people reach out and pick up the phone and sit and have a chat with you just to review the situation or plan for the future. Just as we close then, for those people maybe earlier on in their business career and starting out in business, what advice would you give to people starting out in business or who are younger in business than you are in terms of years?
I guess the advice I would give them would be take time at the outset to understand where you want to be, and really try and focus in on that, and be brave around about your objectives that you believe in, and be consistent. I guess that's it. You know, I would like to think that over the years, we've never had a perfect business. I've never been striving for a perfect business, but we've always been consistent. And I think any of our clients would say that, you know, so consistency is a good model, or a good place to grow from. And as I say, if your principles are good and you know exactly what you want, you know, had I been braver 10 years ago with certain things, this would have been a different business today. But we are where we are. We continue to grow and prosper, and I guess I'm thankful for that.
Well, Ian, look, thank you for sharing your knowledge and experience. I'm sure there's lots of nuggets in there for people to catch on to. I'd just like to thank you for being on Business Spotlight today.